Active inventory in Bryan and College Station just hit a 10-year high, effectively creating leverage for buyers that we haven't seen in years. But the big news story is that Governor Abbott passed the Frat House Bill, which effectively kills the occupancy limits that we've seen here in Bryan and College Station. As if that wasn't enough, we also saw the passing of the big Beautiful Bill by President Trump. That brings back cost segregation and accelerated depreciation. Guys, it is a good time to be a buyer. So let me break down exactly what all this means to you in this month's market update here for Bryan and College Station. Stay tuned. This is a good one. For our housing market data, there's 3 numbers I want you to focus on. And then once we finish this up, I'm going to give you a little bit of prediction of what I think is going to happen for the rest of the summer. Let's start off with 2.9%. That is the year-over-year appreciation of the median house price, which is now $325,000. The fact that our houses are continuing to increase in value is a good thing for everybody. It shows that we've got a strong market and a strong housing market that's worth investing in here in Bryan and College Station. The second number is 4.8. That is our months of inventory. This is a measure of whether it's a buyer or seller's market, and this number continues to increase, indicating more and more of a buyer's market. Last year we were at 4.2. So we've seen a steady increase for the last 12 months. The last number, and the most important one, is 1,320. I don't care so much about the number as what it represents, and that is the fact that we have more active listings right now in Bryan and College Station than we have in the last 10 years. Buyers have more options, more houses to choose from than they've ever had. And as a result, basic supply and demand says that gives buyers the upper hand in negotiations, which could lead to a leveling off or even a drop off in prices. But what we've seen more locally, at least with the clients I've been working with, is that buyers are getting things like seller concessions, they're getting roofs replaced, new ACs, or just more favorable terms of the contract. So that's what we're seeing right now. Let's talk about my prediction for the rest of the summer. The last year and some change has been a tough market, and that has been largely driven by the lack of demand. And the demand is weak because, of course, interest rates continue to stay in this high 6, low 7 range. And honestly, as you can see here, based on the data from Mortgage News Daily, we are steadily between 6.6 and 7.2% for the entire first half of 2025. Now, if interest rates came down, we could see an increase in buyer activity, which would ultimately lower the active inventory, it would lower the months of inventory, and we'd go back to a highly appreciating feeding frenzy of a market. The problem is the big folks, the smart folks that make these predictions don't seem to think that rates are going to come down to a significant degree. In fact, if we look at the predicted forecast by the big companies, Fannie Mae, Mortgage Bankers Association, and others, we're looking at an average interest rate at the end of 2025 of around 6.6%, which quite frankly isn't that much lower than where we're at right now at 6.8%. What if we go out even further? What about 2026? In 2026, they're predicting another slight drop, but not significant, still in the mid to low 6s, 6.1, 6.4, 6.3, somewhere around there. Well, if interest rates don't come down, we don't see buyers coming to the market, and therefore we will see a continued increase in months of inventory, active listings, and we might even, God forbid, but we might even see a decrease in the median house price on a year-over-year basis. Guys, the market is going to continue to get soft. The only way that I see that interest rates come down significantly is if we do see the jobs report, meaning unemployment, increase to a significant degree. That could trigger or at least indicate a recession, at which case the Fed might lower the interest rate, which might lower the bond yields, which might lower mortgage rates. There's a lot of mites in there, guys. My bold prediction for at least the rest of the summer this year in Bryan and College Station is increasing inventory and a continued buyer's market. Buyers, it's a good time to be shopping for houses. Sellers, it's important to price your house right. Quick soapbox, stay with me here, guys. If you are a seller, I don't feel bad for you because the amount of appreciation we've seen in the last few years has been significant. Your house is still worth a lot more money than it was just a few years ago. And if you price your house right, it will still sell really quickly. In fact, the house I most recently sold in just 32 days, and I still got over what I believe market value was for that house. So you can still sell a house quickly. You just have to be smart about it and price it right. Don't be greedy. Off the soapbox, guys, the next things I want to tell you about are some recent changes to the laws, both at the state and national level, that directly affect you as an investor. This first news story is not being advertised. In fact, if you Google it, you probably won't be able to find it. And that is the fact that Governor Abbott signed the Frat House Bill into law. The Frat House Bill, also known as Senate Bill 1567, effectively overrides the local occupancy restrictions put into place by towns like Bryan and College Station. You see, until now, there were occupancy restrictions that said no more than 4 unrelated people could live in a single residence. This was true in both Bryan and College Station. Bryan actually had an even more restricted overlay in certain neighborhoods that said no more than 2 unrelated people could live in a single house. And in College Station, they took this so seriously, they were fining people up to $500. But as of September 1st, when the new law takes effect, the old occupancy restrictions will go away. We will now be more focused on the number of bedrooms and square footage, not just a simple overlay that says no more than X number of unrelated people living in a house. Of course, this directly affects our investors looking at student housing. Specifically, I think it will help out parents who can now buy a 5-bedroom house, put their son or daughter in one room, fill the other 3, 4, 5 bedrooms with their friends, and ultimately make more money while investing in student housing while their son or daughter attends A&M. That is big news for our local investors. The next big news story you might have already heard of, and that is that President Trump signed the Big Beautiful Bill. The Big Beautiful Bill is bringing back 100% accelerated depreciation. It's something that existed in 2017 and had since been phased out. Of course, now it's coming back. What you might wonder is, what the heck is 100% accelerated depreciation? And it is kind of complex, so I'm going to break it down in such a way that even I could understand. When you buy a rental property, your CPA will depreciate that house and apply it against the income that you've made on that house. So they use 27 and a half years worth of depreciation. They'll divide the building cost, this doesn't include the land, just the building on the land, by 27 and a half years, and you get that amount of paper loss every year. Depreciation is good, it lowers our taxes. Now, with 100% accelerated depreciation, what you can do is do a cost segregation study. That's where somebody will look at the house and determine if there are any components of that house whose lifespan is 15 years or less. A lot of people say that roughly a third of a residential house has items in it that's lifespan is 15 years or less. So if it's a building worth $300K, roughly $100,000 will fall into that 15-year or less bucket. And thanks to 100% accelerated depreciation, you get to take all of that loss in year 1. So effectively, you can show a $100,000 loss on your taxes in a single year that can greatly reduce any income that you create off that property, off of selling other properties, or if you're a real estate professional, you can use that to offset your active income. Of course, $100,000 worth of loss will save you somewhere between $20,000 and $35,000 in your taxes. So this has a major implication for investors, both professional investors and high net worth folks who use investing as a means to lower their taxes. So let's summarize this market update. Bryan and College Station market is getting softer and softer, more of a buyer's market, creating opportunities for buyers. The local bill passed by Governor Abbott, known as the Frat House Bill, creates opportunity where you can make more money off of 5-bedroom houses without technically having an illegal frat house. And cost segregations will allow you to use 100% accelerated depreciation. Thanks to the Big Beautiful Bill, you are going to now have more options in houses, make more money off your houses, and save on taxes. Tell me it's not a great time to be a buyer in Bryan and College Station. Maybe you disagree, in which case I'd love to hear from you in the comments below. That's why they're there. Guys, I really hope that whether you agree or disagree that I brought you some value through this video. So I ask 3 simple things. 1, hit that like button so other people know that this video exists. 2, hit the subscribe button so that you get notified every time I drop a new video. And 3, until I drop that new video next week, you take it easy.